First on the agenda is approval of the minutes of March 1st, 2022. Can I have a motion, please? Betty, thank you. Sharon, second. All those in favor?
Aye.
Aye.
Opposed? Motion carries. Never gave anybody a chance to question. Informational items. First thing, monthly financial report. Julie?
Hello, how you doing today? Do we have a microphone, or do you want me to just shout? Just shout? Okay. All right. What we have before you is period 13 and period 1. So, you got a lot of information. I'm not going to go through a lot of it just because it's in your packet. I'm going to try and give you some big bullet points and a couple things that are not really in your packet. So since I have my notes and I'm not sitting down, I'm going to try and read this a little. So first off, one significant difference I did want to point out between period 13 and period 1 is we're starting to try and be better about our continuity between the audit, the budget, and these financial reports to include PCAPs in all of them. So period 13, or the monthly financial report, used to not include PCAPs, even though in the audit and the budget we do include that. So that's a big difference. So with that difference, the period 13, yes, thank you, Becky, for all the good things you bring, and on the bad years we'll blame you. I'm just kidding. So for FY21, we have about $4.9 million surplus. That's including PCAPs, and that is unaudited. So I took whatever audit adjustments have hit. There's probably going to be others. I can't guarantee you what that's going to be, so that's a pretty fair estimate, give or take, let's say a couple $100,000. Going from that, the biggest impact to the good year is one intergovernmental revenue that has soared. I'm going to touch on that a little bit later. General fund expenditures were higher than they were in 2020. The main reason has to do, if you guys remember, doing that budget transfer for $5 million to do the paying down those loans. Well, with the surplus that we have in FY21, which will be about that $5 million, we already have that dedicated, as we talked about in previous meetings, to the paying down and the refunding of the bonds, and then the election equipment. So even though there's that $4.9 million surplus, that's already committed to those two reasons. So for the new period 1, there'll be new departments. You know, as the year begins, there's a lot of departments highlighted, and as the year goes on, it kind of goes down because there's a lot of fluctuations and when things are paid. So I have those highlighted. There's nothing that I think is crazy as a period 1, so nothing to highlight. As far as changes in fund balances, we have 2 funds only reported at the end of the fiscal year as not being fund balance policy, which is great. We already know heading to notes. And the other one is the mortgage foreclosure fund. Hopefully at some point in the next 2 fiscal years, revenues will increase and that will go back down. As of fiscal year 22, the risk management fund is now primarily a property tax supported fund, so we actually need to change that fund balance policy. So that fund, as you'll see, is now on the bad list again as of January 22. That's to be expected, and until the revenues come in, that's going to be there. But we've made huge progress. The board has dedicated funds, and we've climbed out of that hole, even though it doesn't feel like that for the next several months. So just note that. As far as the major revenues, this is kind of where you guys really like to hear the reports, right? Where is the money? All right, sales tax revenues, we ended at about $3.2 million over what we expected. We knew that it was going to be higher because of the Level the Playing Field Act. We just didn't know how much. But
Can you give that number again? I'm sorry.
3.2
million.
Yeah. The fourth quarter was higher by $715,000, but that wasn't even the best quarter, which it usually is because of, you know, the end of the year, Christmas and everything. But the best quarter was actually the second year, which was about 1.1 million. And there was another factor involved in that, but those 2 quarters were really good. The next two updates I'm going to give. The Illinois Municipal League does a review magazine, and in their February edition, they have a really good explanation of a couple of the highlights I'm going to give. So I would really encourage you to really read that in your spare time to give you a better explanation of what's going on. So one of the things that they highlighted was that, remember we did the census? So we have funds that are given to us based off population. So our population revenues are actually only on our unincorporated rate, or unincorporated population, and that population for us actually went down 1,610 residents. So we used to get funds based off of 37,010, and now it's only 35,400. So luckily, we're not like the city, in which they have a much larger population, and so these variations would impact them a lot more. So based off of IML and the math I did, they estimate roughly about a $350,000 impact to our budget this year. So because those population is lower, that's going to go down. So it's an impact, but I don't think it's going to be crippling to the county.
Is that annualized?
That was based off the annualized, yes. Because just income tax alone in 2 months, the first 2 months of the year, I estimate about $39,000 impact between January and February distributions.
Okay.
So then instead of going through and doing a huge calculation, I just took what their numbers were based off the population change.
Thank you.
So for income taxes, that has been soaring. 9 of the 12 months in 2021 was the highest in 24 years. And then already in 2022, 1 of those 2 months are already the highest, which that's incredible.
It's incredible in the middle of COVID, is what I was saying to Steve.
Yeah.
Sorry to interrupt. Sorry to interrupt, Jim.
And this is where I have a whole page of notes of what I'm trying to regurgitate from IML. So I'm going to just highlight a couple of them so I don't report wrong. But if you would like me to go through all of them, I can. Some of it's the improved labor market. The other is high receipts. There was one thing, let's see. One of the impacts of this last year specifically was in November of last year, their House of Representatives passed the Build Back Better deal. Since then, I researched, it's kind of a little dead in the water right now, but there were people who made changes last year because of the potential impacts of that Build Back Better Act, should that have been passed. For example, there would have been surcharge taxes on high income earners. There would have been higher taxes on capital gains and dividends, and other major tax changes for corporations. So a lot of people prepaid and changed what was happening in anticipation of that. Another big impact, which is the increases in wages. Would have been up about 14%. The labor market has rebounded across all industries. Their wage increase was about 4.1%, and because of the high income corporate income, a lot of people paid bonuses, so that's also to play into that. And also the unemployment rate is now 5.7% as opposed to 8.1% the year prior. So a lot of good things going there. Now Pprt tax is off the charts, incredibly. So it's the highest since its inception in 1979. It's just gone. From May 21 to December 21, it over doubled the same period of 2020. And then it's also in 2020 64% above the pre-pandemic levels in fiscal year 20. So part of that has to do with a change in the law. So there was a Public Act 102-0658, which was enacted in August of 21, and that required S corporations and partnerships, instead of doing a payment annually, they have to do it quarterly. So some of the payments that came in January and February, which were really high, are probably inflated because they're now going to be paid quarterly. So it'll be interesting to see how this year plays out as far as distributions. But PPRT is parallel to what has been happening at a federal level and what they reported. And we still have, though, uncertainty, ML reported, obviously, with the economy. Even though everything is good, we still don't know the impact of really what inflation is going to do, because that's crazy. The fuel chain, the supply chain is still having issues. There's high customer demand now, and there's now a tight labor market. So those are some of the highlights of some of the points that they had highlighted in the last February. I will try and summarize that again for February to pull that in for all those who have no interest in reading that report. But if you would like a better report, I would highlight it's the February 22 review magazine for IML. So those were my notes for the 2 periods. If you have any questions, I'll do my best to answer.
Before we have questions, why don't we take a moment to approve Rachel and Linda to be on conference call. Can I have a motion, please? Sharon and Ethan Breyer. All those in favor?
Aye.
Opposed? Motion carried. Welcome aboard. Okay, any questions for anyone?
Thank you.
All right.
All right.
A lot of questions.
Well, thank you.
Thank you.
Hopefully next month I won't talk too long, or Heather does, so it'll be a little bit briefer. Thank you, everyone.
Okay, review on accounts payable.
Hello. I just wanted to give a little more detail. Back in September, before I arrived, I believe there were some changes that were made, as they're highlighted in your package here, to the AP process. And since I've started just a couple months ago, in talking with the staff in the finance department, we thought there were some other ways that we could make some improvements. We've really been focusing on the invoices that come through. We want to make sure that the way that they're coded is aligned with the budget, and that they're coded to the appropriate subcodes, basically the commodities versus contractual. But within that, also that telephone bills are going to telephone bills and not to just utilities, so that it's easier to really see where we're spending the money on in the different departments. This is also a good way to prepare for our new ERP system that we have coming next January, because it'll be slicker to do reporting once we move into there, because there's a lot more capability in that program to really help look across and see where we can make the most efficient use of taxpayer dollars too. So in working with our department staff and staff throughout the county that are working on entering batches for AP, we've been communicating with them and have been able to identify, I don't want to necessarily say inconsistencies, but discrepancies into what they're coding things as. We work with them and explain to them, because not all of them are trained accountants, and that's fine. So we are being able to educate them a little bit more on where things should be coded to. So we've seen a lot of improvement, and we've not had any pushback, and it's gone very smoothly. So things seem to be running smoothly on that. We're going to look for a way. We've had a couple of discussions now on prepaid expenses and how we want to handle those going forward. That would make the most sense. So we'll be putting forward a resolution for recommended changes on that, as well as some improvements on P cards, where we have recurring vendor expenses charged to those. And again, that's kind of streamlining with our implementation of the new ERP system, where we'll be able to pull up. You can't really do it as easily on a P card and pull up how many times you shop at the Home Depot, or for example, but with this new system, we'll be able to do that. So we're really doing a lot of back-end work to try to align with our new implementation system. So do you have any other?
Well, those are the highlights that were in the report, and I wanted her to kind of bring them out because we were asking for process improvements, that doing not just the audit of the checks every month that we've gotten for years from the auditor, but process improvements. So I wanted to highlight that. That's much. Thank you, Heather.
Thank you.
I have a question, Mr.
Sure,
Chairman.
absolutely.
And this is the topic from a couple of years ago, the Pprt authorization or approval process. I don't know if you've looked at that yet, because we had some, 2 years ago in our audit, it was, our outside audit, that was brought up. And I don't think some of us agreed that the solution was a very, I'll say myself, a very robust solution. So we'd like to at least make sure that gets looked at again.
Okay, sure. Yeah, I'm not as familiar with what has happened, but I will become familiar with it and we'll find
Okay.
some recommendations going forward.
Thank you.
Any other questions? Thank you, Heather. Heading to Noakes, Paul.
Yes, sir.
This is Paul's last month for giving this
Aw.
report. He's going to move on.
Oh, man.
He's going to move across the street. So, good luck to you, Paul.
Thanks, sir.
Mhm.
In your packet this month are, as with Julie, the December 2021 through period 13, as well as January 2022 financials for Headington Oaks. I'll be happy to try and answer any questions you might have on those. But first, a couple of notes. On the AR, we have submitted the additional information to RSM that they had requested in regards to the Medicare reimbursement project. So they should be coming back to us now to take the next steps in that project. So we're moving on with that. One of our biggest court cases had kind of gone silent. We've recently received contact from them. So we're now with the state's attorney's office preparing a response to move forward with that. And also today we have a check in hand, $31,000 that was money that was written off all the way back in 2015 for a now defunct hospice company. So that money had been written off years ago, so that was a nice unexpected windfall to receive some money out of that bankruptcy estate. So be happy to answer any questions you may have.
Any questions for Paul? Thank you, Paul.
So,
Yes, Paul. Well,
just wondering who's going to take over the accounts after he's gone.
Great question, Mr. Renault. We still have a line staff team member in finance that does the lion's share of the work, but oversight is going to fall to Heather.
thank you. Legislative updates.
Nothing specific, Mr. Chairman.
Okay. We have a joint resolution with the County Health Department Committee. You want to give a report on that?
Oh, you want me to report that? For Phil?
You just want
We
to
got
get a
joint.
motion on the floor.
A motion on the floor, Phil?
This is what
Jennifer? Yeah, she's drawing a blank.
Should I
Sorry,
say
Michelle.
We don't have our name tags up.
No, that's, you get to
Okay.
choose that one.
Yeah.
Okay.
Thanks, Mr. Chairman. If you've got some detailed questions, I know Monica's in the audience and will be able to answer anything that I can't. And also, Ms. Duncan chaired the committee meeting today, so she is available to provide some feedback or information. What's before you is a rollover appropriation. The Health Department received numerous grants. There's 3 specific itemized here related to COVID. These are unspent dollars that from the prior year that need to be moved to the current fiscal year. One of them has a timeline of March. The other one has an intermediate timeline, and the third one is a timeline of the end of the current calendar year for dollars to be expended. These are all reimbursable, so we've got to expend the dollars first and then get reimbursed based on what you see here. Monica, did I leave anything out you want to touch on?
And I think there's just, and then there is another 4th grant, which is a workforce development or crisis grant, and that actually will go for a year and a half. So that will actually go into June 31st of June 30th. Thank you. June 30th of 2023.
Any questions? Okay, all those in favor say aye.
Aye.
Opposed, same. Motion carried unanimously. Thank you. Okay, under resolutions, we have an encumbrance resolution for FY 2022 rollover appropriations.
Make a motion.
Thank you, Steve. And Eden Blair, second. Discussion. Go ahead.
Thanks, Mr. Chairman. So this is an item that your committee reviews on an annual basis. It includes all of the open purchase orders from the prior year where the purchase order is still open, and obviously spending authority needs to be moved forward. There are also some additional items that are included in this. For example, there are both revenues and expenditures into PCAPs for a Walmart community grant that Becky was able to obtain related to intake diversion programs. There's also, if you recall, you had awarded a consulting contract to Farnsworth Group based on a grant we received from USEDA for the Mapleton Area Industrial Wastewater Development Study. That local match is being rolled over because we're in the middle of that project. It wasn't. We also have in the resolution an amount related to it's roughly, I think, $22,000 between what we appropriated originally and what our potential obligation would be under the new Springdale Intergovernmental Agreement that was approved at the last board meeting. There's a variety of compensation adjustments, and then if you recall, you budgeted money for a chief diversity, equity, and inclusion officer. That position is not part of the rollover, but we are. I'm requesting that the management analyst position that currently runs through September be converted to a line staff position to support the chief DEI officer. That position is something that in counties our size and larger that are actively working on DEI initiatives, no one is doing it well when it's a one-person department. So we'll have a line staff, and then we'll have a senior manager. There will be both an internal and an external focus to their activities. We talked a little bit about this today at County Operations Committee. Internally, it's recruitment to diversify our workforce to be more reflective of the community, and training. And then externally, it's working with the city's chief DEI officer to support the Joint Commission from the city and county on racial justice and equity, and then other DEI initiatives out in the community. That's at a very high level. Some of the things that are
and the total was like $2.5 million.
2.8 is the total. Rounding. Happy to answer any questions from the committee.
Any more questions?
How much of that is the health department?
The health department is separate from that in terms of what it's a separate item that you just voted on.
Okay. Gotcha. So,
but they do have some in here, Mr. Chairman. It's not I would say less than 100,000. Just quick looking at it real quick.
So what was it, 2.8?
Yes.
And encumbrances were the majority, with the exception of the other categories of PCAPs and your other expenditures, which were about 365.
That seems pretty close. Yes.
So that's $365,000 of the 2.8 was other adjustments other than encumbrances, just for clarification.
Correct. Yeah, roughly 2.5 of the 2.8 are outstanding purchase orders.
Yeah.
Okay. Any further questions? All those in favor, signify by saying aye.
Aye.
Opposed?
Aye.
Anyone opposed? Carried. Amendment to the tax exempt revenue bonds series 2012. motion. Mr. Dillon, thank you. Eden Laird, thank you again. Discussion or presentation.
Thanks, Mr. Heather's going to handle it for you, for the committee today.
Thank you. So this amendment is, or the second resolution is related to conduit bonds that were issued in 2012 for Goodwill Industries of Central Illinois. The interest rate for the bonds is currently set at the LIBOR rate, and which is being phased out at the end of this calendar year. And so the proposed resolution is essentially to approve an amendment of the conduit bond to reflect the change from LIBOR to the BSBY interest rate, and there's no financial impact to the county. And I believe we have Kristen Hilson from Chapman and Cutler on the line. She's our bond counsel. If there are any questions, since this is related to bonds.
Anyone have questions?
Is LIBOR just being eliminated as a financial services industry tool, or we're just changing it as the baseline for our bond?
It's being completely phased out, so that there will be no LIBOR interest rate.
So what is the other thing called BSBY?
BSBY, B-S-B-Y.
And is it comprised of the same sources that LIBOR constitutes?
That is a good question, and I am not sure. Maybe Kristen would be able to.
Sure, this is Kristen Hilton at Chapman. So BSBY is, it's technically a different rate, but is similar in that it approximates an overnight lending rate. So it's a variable rate index that's designed to measure, again, an overnight lending rate. And so as the LIBOR rate phases out, different banks have adopted different indices to take LIBOR's place, BSBY being one of them, the Bloomberg Short-Term Bank Yield Index. So again, it's intended to serve as a variable rate benchmark.
Thank you.
Any further questions? Okay, call a motion. All those in favor, please signify by saying aye.
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 Opposed? Motion carries. Miscellaneous. Anyone have any miscellaneous before Mr. Round comes up here?
Jim, I just want to recognize you as the first committee chairman to use a BSBY rate for our loan calculation. Congratulations.
Thank you.
The bastion of LIBOR has fallen off the indices world, and congratulations.
Yeah, appreciate that.
Getting Julie all choked up over there. What's going on?
Say bye to LIBOR.
Okay, we are adjourned. Thank you.